Hey everyone, welcome back to your weekly market outlook. This is for the 12th of September 2025. Let's get started with last week's numbers here, and obviously we were looking at the inflation numbers here. CPI is as per consensus. I think in terms of the inflation expectation, we did see that increase in inflation, especially if you take a look at the monthly change there. It does overshoot the expectation a little bit, 0.2 to 0.4%. But generally, it is stable at this point in time. It's still below 3%. Core CPI remains at 3.1%. So yeah, we have the whole set of data right now. Labor market's not doing so well. Inflation is going up, but it's not extremely up. So this does give room for the FOMC to start cutting interest rates, and I think the market is already starting to price in that interest rate cuts. A lot of stuff happening this week here. We've got the Canadian interest rate decision, we've got the FOMC, Bank of England, as well as Japan. Let's take a look at the Canadian inflation expectation first. For the Canadian inflation, it is expected to come down, and because of that, the interest rate decision from Canada this week is that they're expecting a 25 basis points cut. So this kind of still hangs on the inflation expectations here. If inflation doesn't go down, then they might not cut interest rates. But if it does came in as projected, we see a lower inflation in Canada. I think estimates is currently about 1.7% for the year on year. But if we take a look at the trim CPI there, it remains at 3% there. But yeah, year-on-year CPI here, we're currently looking at a potential for a drop from 1.9 to 1.7. So with that, the Canadian interest rate decision there would probably be at that 25 basis points cut. Now for the UK, inflation expectation remains the same at 3.8%. As long as it doesn't overshoot 4%, I don't think there's actually going to be a lot from Bank of England here. So FOMC, obviously main focus. The FOMC interest rate decision, 25 basis points. I think this has already been fully priced into the market. I think there are talks about a potential for a 50 basis points cut from the FOMC, but again, probability is still pretty low. With the FOMC, though, what we are looking at here is not really that interest rate decision. I think 25 basis points, everyone can accept that we are expecting that 25 basis points cut to happen. But what comes with it? Is it going to be a dovish statement, or is it going to be a hawkish cut from the FOMC? I think that's going to be key in terms of where the market is going to go for the rest of 2025. All right, then obviously we have the UK interest rate decision there, 4%. I think they're going to leave it unchanged, just like the ECB did last week. It's just too early for them to continue cutting interest rates. So yeah, they'll probably just leave it at 4% for the Bank of England there. Bank of Japan, interest rate decision. We are expecting a hike, but probably not going to happen this month. There's a lot of political instability going on in Japan, and with what's going on in the world right now in terms of what the FOMC is going to be doing as well, it's very risky for the Bank of Japan to actually hike this month, especially if the especially if FOMC cuts aggressively as well. So we're not expecting any hikes from the Bank of Japan. But we'll see what happens there in terms of the comments. We're not expecting the Bank of Japan, Friday to be kind of an eventful thing for the market this week, except for yen crosses, obviously. All right, let's move on to the technicals here. The Aussie USD finally break about 66. We are out of that range right now, 64, 66. We're finally out of that range. We're moving on to a new level here. 66 is going to be the new floor. 67 is going to be the immediate resistance. Beyond that, we go 68. But right now, let's focus on that 66, 67 range there. Market is not overbought as of yet. I think we're looking at a positive correlation with gold at this point in time. So as long as gold maintains its position, as long as the risk sentiment is positive in the market there, then yeah, I think the Aussie is likely going to be stable at that 66, 67 range right now. Not expecting this one to move below 65. I think 65 is kind of the ultimate support level there. That's where the Ishimoku cloud, and that's also the weekly pivot. The support 2 on the weekly pivot is currently located. Euro USD, we'll have a new trend line to watch out for, and if we take a look at the movement here, this is currently pressuring to the upside. but we're not looking at any changes in terms of the RSI and the stochastics. It's still indicating that there's no trend in the market. Obviously, the key level to break is still 1.1750. We had that close above 1.1750 last week, but it's not sustainable. So we are focusing on that level again, all the way up to 1.1830. But again, position on this one here, it is above the Ishimoku cloud. Support wise, we still have 1.1650 and 1.16 on the Euro USD. The sterling is range bound. 1.36 is still capping further progress. On the downside, we got 1.34. This is technically flat. Positioning here is above the Ishimoku cloud, but if you take a look at the RSI, it's not indicating any uptrend here on the sterling. So we won't confirm that uptrend until we actually have a clean break above 1.36, and then it opens up a move towards 1.38, which is roughly around that June high for the sterling there. Dollar yen quickly approaching, it's kind of getting sticky to that support trend line here. It is inside the Ichimoku cloud. In terms of the support, it currently has shifted to the upside a little bit. 147 is the level you want to watch out for. Any break below 147, that would actually break below the support trend line. It would also break below the Ichimoku cloud, and that could take the dollar yen down really quickly. And how far can it go? We're talking about 144, 142 there, pretty much in an instant. And I would kind of expect that the catalyst for this would be the interest rate decision from the FOMC this week. On the flip side, if it does break above 149, it's likely going to still be limited at 151. So there's actually going to be a lot more room if it does break to the downside. If it breaks to the upside, then it's really more of a struggle to push to the upside. Remembering that monetary policies between the US and Japan is going to be very different. One is starting to cut interest rate, while Japan is looking to hike interest rate. That's going to minimize the distance between the two interest rates, and that's not going to be good for carry trades. So I doubt we're going to be looking at any carry trades happening on the dollar yen. So that push to the upside, if it does break to the upside, it's going to be really more of a struggle. But any break down below 147, that's going to be an easy drop for the dollar Japanese yen. All right, so with that, good luck to your trades for this week, and I'll see you soon.